Let's focus on the taxation of miscellaneous income items frequently tested on the enrolled agent exam. One of the most common concepts is unemployment compensation. The exam will present a scenario where a taxpayer receives state unemployment benefits after being laid off. The trap here is the mistaken belief that this is non-taxable like other government assistance. However, for federal income tax purposes, unemployment compensation is 100% taxable. If a client received $10,000 in benefits, the full $10,000 is included in their gross income and reported on their tax return. There are no thresholds or exceptions to memorize, which simplifies the rule but makes it a common point of confusion. Next, we encounter other forms of income like jury duty pay. This is always taxable. The exam might try to confuse you by adding a detail where the taxpayer gives their jury duty pay to their employer because the employer continued to pay their salary. In this specific case, the taxpayer still includes the jury duty pay in income but can then deduct the amount paid to the employer as an above-the-line adjustment to income. This two-step process is a classic exam question structure. Now let's discuss gambling, prizes, and awards, which are grouped together in the miscellaneous income category. Gambling winnings are fully taxable. An exam question will give you a taxpayer who won $5,000 from a state lottery but also has $12,000 in losing scratch-off tickets from the same year. The key testing point is the limitation on losses. Gambling losses can only be deducted up to the amount of winnings. In this case, the taxpayer must report the $5,000 of winnings as income, and they can only deduct $5,000 of their losses. The remaining $7,000 of losses cannot be carried forward or used in any way. Furthermore, these gambling losses are only deductible as an itemized deduction on Schedule A. If the taxpayer takes the standard deduction, they get no benefit from the losses at all. This is a critical detail. Similarly, prizes and awards from drawings or contests are fully taxable at their fair market value. If you win a car valued at $30,000, you have $30,000 of taxable income. Finally, we must distinguish between a hobby and a business. The exam loves to test this because it affects expense deductibility. A hobby is an activity not engaged in for profit. If a taxpayer makes $2,000 selling handmade crafts, but has $3,000 in expenses for materials, they must report the $2,000 in hobby income. However, they cannot deduct any of the $3,000 in expenses to create a loss. The Tax Cuts and Jobs Act eliminated the miscellaneous itemized deduction for hobby expenses. So, income is taxable, but expenses are not deductible. The exam will present a scenario, and you must decide if it is a hobby or a business, typically by seeing if the taxpayer is trying to claim a loss. If they are, and the activity sounds like a hobby, the loss is disallowed. To remember these often forgotten income sources, just think that the IRS considers it a JPAG day when you get paid. J for jury duty, P for prizes, A for awards, and G for gambling. And remember, unemployment is always taxable. Remembering that these all add to gross income will secure you points on the exam.